Well, thank you for joining us here on a Friday as we put the finishing touches on this trading week here, and happy December. First trading day in December. As you recall, yesterday was the final trading day of November, and that did cause a little bit of unusual market activity as we saw some profit taking at the end of the month. That tends to happen a lot of times, and here to talk about it, we have Steve Georgy on the line. He joins us from Allendale in McHenry, Illinois. So, Steve, thanks for being part of the program here early today to help kick things off. How are you doing?
I'm doing great. Thanks for having me on here this morning.
You bet. Yesterday, one of the bigger stories was deliveries on the grain trade, and it did seem to have an impact on those December contracts versus the other deferred contracts there, and it looks to me like this morning deliveries were pretty heavy again.
They were. You know, we did have some big deliveries. We got some more again, obviously, like you said. You know, and as you mentioned before, a lot of yesterday's move, though, is some short covering from these funds, end-of-the-month type trading. The idea that, hey, the first part of the month, we get new month, new money, and that we may see a little bit more of that here this morning as we get going and we get these markets turned back on.
All right, so tell me about what you expect to see in the overnight trade. We can take a quick peek here at what happened here. And in the corn, it seemed to be fairly flat last night in the Globex market.
Yeah.
Up about 3/4 in that delivery month of December. March was only up a half cent. On the soybean trade, now, we lost ground in soybeans yesterday, but they gained most of it back here overnight, where we had the January up 3 overnight at 9.88 3/4. March up 2 3/4, back up above $10 at $10.50. And then on the wheat trade, overnight we had Chicago March contract down 1/4 cent. The deferreds were just a touch higher. On Kansas City wheat, we had the March contract overnight about 3/4 higher at 4.32 1/4. Interestingly, on the Minneapolis wheat market here overnight, we had the March up 4 3/4 at 6.26 1/2. So it gained back what it had been losing here recently.
Yeah, you know, you're getting a lot of chatter out there, first off in the corn, where you have a lot of guys looking at these charts and looking, what did we do last year? It was December 1st last year, corn market put a low in, and March corn ended up rallying about 20 cents over the next week and a half.
Really?
A lot of that was short covering. Will we see it again? And so carry-out numbers for corn last year were at 1.408 billion. We're right now at 1.48, so we're roughly similar. Will we see that type of reaction again? You've got the market excited to see if that does happen today, so we'll see if that does take place, but that's something to keep an eye on.
Now, I see where we had, excuse me, a new overnight sale reported by USDA. It was corn sold to unknown destinations, 130,000 tons. Maybe that'll help prop up the market a little bit this morning. What do you think about that?
Well, I hope so, because yesterday's export news and export sales we had seen was very disappointing. You had a lot of guys looking for big sales out of corn. We didn't see that yesterday, and now we've got another 130,000. That's great. We need to see demand pick up for corn in order to get these prices to firm up a little bit. Farmers are basically done out there. You've got the bin doors shut. You've got basis that's trying to firm up across the nation. So these are all positive things, but can we get the price to adjust as well? And I think these are things that we need to see as we go forward. But I think the fund liquidation, or at least seeing them come out of some of their short positions, may give some support to this market.
All right, need to take a short break here, Steve, and then we'll talk about the livestock trade in just a little bit. And I did have one remaining question for you related to the wheat, and I want to pose that to you when we come back. We're talking with Steve Georgy of Allendale, and we'll be back in just a moment. We are talking with Steve Georgy of Allendale Incorporated in McHenry, Illinois right now. And Steve, as I alluded to before the break here, I had one remaining question here about the wheat, and that was related to, did you see the new drought monitor map that came out yesterday where it showed pretty intense drought developing over, well, I guess it's centered over Arkansas, and then there's like a moderate drought in a surrounding region there that includes like eastern Oklahoma and northeastern Texas, maybe southeastern Kansas, and up into Missouri there. I guess that really does bear watching, doesn't it, as La Nina becomes more and more entrenched here moving forward?
And it does, you know, and that is something that with the wheat market, we haven't seen really any kind of friendly news in a long time. But if this does develop, and if this continues to develop, this could be something that we need to watch. And as we were mentioning about short covering, the funds have been short wheat for a long, long time, and this may be something that gives them the idea that says, guess what, I shouldn't be this short anymore. And we start to see some kind of support out of the wheat. But I think we can certainly do that if this continues to build.
Okay, so we saw weakness in the livestock trade yesterday, all across the board. But boy, the stock market has just been on fire, and then all the talk is centered around the tax debate, I guess, going on in Capitol Hill. Are they all kind of interrelated, or how do you bridge that gap here in between all these?
Well, it kind of is. When we talk livestock, we've seen the hype that if the stock market does well, it shows that the economy is strong, and it shows for stronger demand. We need to be careful in that. Yes, we do have this tax bill that is going to be proposed. The idea is that they're going to vote on it here today. We'll see what happens. But if this does not pass, and we start to see more of a negative sign as far as the stock market, we know what happened yesterday. Big, strong day because we were going to get this thing going and it was going to get passed. If this doesn't, you may see money coming out of stocks and back into commodities once again. And so it may be friendlier for commodities. Now, when I say commodities, that's everything as a whole. But for livestock, it could end up being a little bit negative if we start to see a pullback as far as the stock market. So we've got to watch that. The funds are long cattle right now. If they say, hey, I don't want to be in cattle, it's kind of the reverse effect we talked about with corn. It's that they're going to need to now liquidate or sell some of their long positions. That may fuel the downside here in the short term if this tax plan doesn't keep this strength generated. So keep an eye on that. That may end up being a big part of what could happen here today.
Very interesting point. Yeah, it has a lot to do with the money flow, doesn't it? And where that investment money goes. Okay, and a lot of times over the years there has been talk about when you have a strong economy that is supportive or bullish for beef prices or steaks, you know, the choice cuts, and there is a correlation there. Interesting day yesterday. We had wholesale beef trade weaker on the day. We had cash cattle trade that finally developed at prices $2 to $3 higher than last week. Yet the futures went down. Explain that, can you?
Well, I think, as I was saying, it's more fear-driven than anything else. You know, there's not a lot there that you can't explain, because when you tend to see cash is usually king, and we end up following the cash market. We didn't do that. And so here today, I think we can find a little support out of cattle as long as everything stays status quo. But, you know, that box beef price came down. We did see that. You know, there's a lot of things that are in question right now. I do feel that as long as everything can stay kind of where it's at, we may end up seeing us firm up a little bit. I think we took a little too much off yesterday. So typically cash is king, but that did not happen yesterday.
Real quickly, do you think hogs have hit resistance?
I think so, yes. You know, seasonally, this is something we're into this time period where we tend to see a break as we go into that January, February time frame. I think we're kind of at that point right now. We saw a big, strong turnaround yesterday. That February contract, $2 off its highs. We may end up seeing a little bit more of a setback yet here as we move forward.
Interesting. All right. Thank you, Steve, for the comments. Steve Georgy of Allendale Incorporated in McHenry, Illinois. Could be an exciting day, interesting day to start out in December.
That's right. Thank you very much for kicking things off for us, Mark.
There you go.